Hello, guys. Welcome to my masterclass today. Thank you for joining me from wherever you're watching me from. My name is Ernest Ebuka, and you are watching Bukas Masterclass. As you all know, this channel, what we do here is crypto trading and tutorials. Anything about trading, anything about trading, crypto trading, forex trading, though we don't mostly talk about forex, but crypto trading and forex trading is also a little bit similar. So, but here, what we do mainly is crypto trading. If you go through all my tutorial videos, all the videos I have in this channel, all of them is talking about crypto trading. Mainly is how I particular can help you to be a profitable crypto trader. And today I have come again with another good trading strategy and another trading tutorials. So, and I'm hoping after this video you are going to be a good trader. In fact, after this video, I have a lot of goodies in this video, a lot of things that you don't know. I will open your eyes. I will open your eyes in a lot of things that is happening in crypto trading that you might not be aware of. So I urge you to subscribe to this channel, like this video, and recommend my channel to your friends. So while we are trying our best to make you a profitable crypto trader, do well also and do a favor for us. Always share to your friends so that we can reach more people. Okay. So let's go on today's tutorial. What are we going to talk about today? Today I'm going to show you about a side of price action strategy. Okay, so in today's tutorial I'm going to tell you 5 things to look for before you place a trade. 5 things to look for before you place any trade. Okay, as a crypto trader, you don't just enter into your exchange and place a trade. No, this is not how we do it. First of all, there are ways to approach the market, and that is what I'm going to show you in this video. There are several 5 different things we know every trader, every professional trader need to know this, and every professional trader know this, and anyone who is aspiring to be a professional crypto trader or to be a profitable crypto trader, you need to know about this. You need to know about these 5 steps. How do you approach the market? How do you place a trade? Okay, so I am going to show you 5 things to look for before you place any trade. If these things are not well arranged, or if these things are not well articulated, then you don't need to press a trade. Okay, and to bring to your notice, again, um, if you are not in this everything we are going to do here, the trades and everything we're going to perform on MaskEX Crypto Exchange. So I don't know whether many of you have signed up already on MaskEX Crypto Exchange. uh this is MaskEX Exchange, and as I do say, before we go in deeper in what we have today, I just need to use this opportunity and show you what MaskEX is all about. So MaskEX is a crypto exchange where you trade cryptos, you buy and sell cryptos. Okay, you trade futures and spot trading with other many good futures in this exchange. I'm going to leave a link. I'm going to leave I'm going to leave a link behind this video. Please do well and use my link and register on this exchange. Okay. Also, join our Telegram community, MaskEX Africa. There is a lot of good things we are doing there. A lot of giveaways, a lot of free things, a lot of tutorials is going on there. Please join and refer your friends as well to join. Okay, let's go ahead in today's tutorial. So I'm going to name five things that you need to look out for before placing any trade as a trader. So let's go. Now, I'm sharing my screen, and if you are looking at my screen, it says price action strategy. Okay, price action strategy. Five things to look for before you place a trade. Okay, now what are the five things to look for before you place a trade? One is know the market structure. Okay, as a trader, you need to determine the market structure. That is the first approach you need to look for before you place any trade. Now, what are the market structure that you need to determine? First is you need to determine whether the market is in uptrend, downtrend, or range. Okay, you need to determine whether the market is in downtrend, uptrend, or range. Now, if you are looking at my screen, there is what we call uptrend in the market. That is when the market is pumping, we call it uptrend. Then there's one when we have a downtrend. That is when the market is bearish, then we call it downtrend. Then there's what we call about range. That is when the market is moving in sideways direction. That means there is no particular movement, there is no particular straight direction that the market is moving on. It can go up and can come down within a shortest period of time. So we call this market structure, this type of market structure, as range. So now I'm going to open my chart and I'm going to show you how to determine how to. I'm going to show you different market phase structures that we have. I'm going to show you the uptrend, I'm going to show you the downtrend, and I'm going to show you the range. This is the first thing to do before you place any trade. Determine the market structure. Then that is the first approach. Okay, if you can see my chart clearly, if you can see my chart very clear. Okay, so this is it. Now, so we have what we call the uptrend. Now, if you're looking at this chart, you can see that from here to here we have what we call uptrend. We have some lower, some higher low, and higher low. So we have some lower low, lower low, lower low. You understand? So when we have higher low, higher again, low, small, and we have another higher. That means we are in the market is what? The market is pumping. Then we have higher, low, higher, low, higher, low. Then what? The market is in uptrend. If you can see that it's a straight looking at this, you already know what the market is. See, if you place a trend line, you can see that the market is in uptrend. Okay, so first thing to determine is the market structure. If the market is in uptrend, that will determine your next approach, and we are reaching there. So now you need to determine whether the market is in uptrend or in downtrend. Okay. Okay, so the next thing, let me show you another example of the market downtrend. Now, if you are looking at my chart, you can see that we had a pullback from here, from exactly from these levels. Okay, from these levels, then we had a downside from here. You can see from here the market dropped to here. Now, if you are a trader looking at this place making lower low, higher low, higher low. So higher low is what we call downtrend. That means that the market is moving downside. Now, first thing, you determine the market structure. Determining the market structure will help you to know the next approach you need to go on. Okay. Now let's look about the next one is the range. That is, the market is not moving up, is not moving down, it's just one place. Okay. Now, if you are looking at this chart from here, you can see that the market was just ranging from here. It goes up, it comes down. Now, as a trader, you don't know how do you trade this? Because this place you can see that it just did within a short period of time, it did down. Maybe you don't know which area is going. Before you know it again, it will start each range direction like this. This is on 4 hour. And on this 4 hour, each of these candle that you are seeing here represent 4 hour time frame. Each candle you are seeing here represent 4 hour time frame. So this will this will tell you that the market moved, this coin moved a long period of time. Each candle here represents 4 hour time frame. So this tell you that this all these things moved a long period of time before a certain direction is being known. Now from here to here can take like, okay, let's say from here 26th May, and here we can see 15th June, almost 1 month. It be moving like this. So as a crypto trader, you might not know, is it too long? You might long, the next candle you see is down. So we call it range. Determine the market structure. Then that is the first approach on what you need to do before you place a trade. That is the first approach before you place a trade. Okay, but there are some things that I want to give you a hint. If you want to do this thing, I want to give you a little hint. So if the market is moving in range direction, now as a trader, as a good trader, what you need to do is first, if you are on 4 hour time frame, if you saw a range direction on 4 hour time frame, try to switch on maybe 15 minutes time frame, 30 minutes time frame, 1 hour time frame to see the market direction on those time frames. Okay, if you can see the market here, the market here might be moving on range direction in 4 hour time frame, but we might add this thing on 15 minutes time frame, and maybe we will not see. I think I lost these things. I can see what happened. Okay, so let me show you. Let me use this one as an example. Okay, so okay, you can see that in 45 minutes as well, the market was still moving in range direction before we had an upside direction, a long an uptrend direction here. So when the market is moving on range direction, sometimes you can decide to watch than to trade. Yes, you can decide to watch the next formation of the market before you place a trade. You understand? So determine the market structure first before you place a trade. The next point. So now, after determining whether the market is a uptrend, downtrend, or range, what next for you to do? The next thing you need to do is find the area of value. If you are watching this video, I want you to be putting down this thing on your notes. This is how I personally approach market every single day. I'm not joking with you. I'm telling you the real fact. This is how I approach market every single day. And if you are following me and I'll be making a successful trade, this is how I approach the market. So don't joke with this video. And if you love your friend, you will need to share this video to your friend so that both of you will become a profitable crypto trader. Now, next thing is you find the area of value. This means the area where the buyers and sellers are hoping to take action. Where are these areas? Where are these areas of value? In most cases, this is being determined by what? Support and resistance, trend line, moving average, and so on. We use these tools to determine the area of value. We use these tools to determine what? The area of value. Now, let me show you in my chart. Okay. Now, if you are seeing my chart, this is where you determine what? This is now telling you what? To find the area of value. The area of what? Value. The area of what? Value. Now, we find the area of value using what? Support and resistance. Now, if I want to trade this one, I will draw a line like this from here to here. Okay? From here to here. These areas is an area of value. This place is area of value. This place is area of value. This place is area of value. Determine what? After you have found that the market is uptrend or the market is downtrend, the next what is to determine the area of value. And I want to give you a hint. Now, if the market is in uptrend, you determine the area of value on support for a possible retrace for long position. If the market if the market is downtrend, if the market is showing the sign of downtrends, determine the area of value on resistance so that you short the market and continue with the trend. Okay? If the market is in range, that's the time you long and you short. You long and you short, depending on the different time frames that you use. So, first approach, find the area of value and place your trade. Determine the area of value and place your trade. That is what? Number two. Now, this thing is showing this is the area of value. Another this one is area of value. This place is area of value. Area of value are those places that the buyers or the sellers are hoping to take action. That area that the buyers and the sellers are trying to take what? Action. Hope you understand. Now, let's find the area of value on uptrend. Now you can see this chart here. You can see here now, from here, this is an area of value. This is an area of value. This place is an area of value. Okay, if I can place this thing very well, Okay, this is area of value. The first one here is this. The second one here we have this, this, this. All these places are area of value. And area of value for support and resistance are those areas that, or those things that will make the buyers or the sellers to take action. Those spots that they took action is the area of value. Now, you determine this the next phase. There is also another thing to use to determine the area of value, which is what we call the moving average. If you are looking at my chart, what I have here is moving average. Let me off it. Do you see line anymore? No. Now, if I put it on, I just put it on. I mm, maybe I need to change the color. Visibility, style. Um, I think I have set the wrong color and this other refused to show up. Okay. Visibility, import, and color paste preview close. Okay. What happened to my okay? Okay. Oh. Sorry, guys. I was closing volume. I thought I was closing my MA. So this is volume here, right here. But okay now. Okay, see. So now I want to show you. I want to show you. Oh my god, these things are. I don't like every time. I don't like to put in too much drawing so that you can understand what I'm doing. Now, placing another a thing that determine another thing that you can use to find the area of value is what the MAC, the moving average. Okay. Now, the moving average can also be used to determine the area of value. How do you use moving average to determine the area of value? When when moving when the moving average is moving below the price. Now, if the moving average is moving above the price, okay, now this areas is the area of value. You know why? If the price break above the moving average, it shows that market is trying to have an impulse move to the upside. But if the price hits, moving average also serve as a support and resistance. How does the moving average serve as a support and resistance? Here, this area, this moving average served as what? As a resistance. As a trader, this place is an area of value. Now, you find out that it has hit this support and resistance. What did it do next? It brought the price down. Okay, it's technically brought the price down. And now, this thing from here to here, you have known that it has formed a several lower highs, a several higher low, higher low, higher low. Okay, higher low, higher low, higher low, higher low, higher low. Okay, now you have to understand that the market is in what? In downtrend. Now you're looking for the possible place for you to short the market. Now, if you're looking for a possible place for you to short the market, this is the area you need to short the market. Because what helps you to determine that this place is the area of value, you added your what? You remove this thing, you will not know. But you only know that this place served as a resistance for the first time. You can use the resistance to determine it, and you can also use moving average to determine it. Now, if I on my 50 MA, 50 moving average, 50 period moving average, you can see this area where it dropped, where this moving average served as a resistance and the price moved down. Area of value. Moving average can serve as an area of value. Another thing that can serve as an area of value is trend line. Trend line can serve as an area of value. Um, That is when we have a trend line break. When we have a trend line break, or if you have a trend line, but I will go more deeper on it when I approach to the next step. That is the next step to go to. Okay, we have covered what? First, what is you determine the market structure. Second one is you find the area of value. Now, what is the third one? What is the third one? The third one is now you want to place the trade. Entry trigger. Entry trigger. What will get you into the trade? How will you enter the trade? How will you enter the trade? Will you now place the trade? You have found the market structure, you have found the area of value. How will you now long or short? First one I used is candlestick pattern. You long when know that the market is in option and you see a hammer. You don't need anybody to tell you that this is the time for you to long. Candlestick pattern. Or you want to short and you see an inverted hammer. You know that the market is in downtrend and you see an inverted hammer. No, you don't need anybody to tell you that this is the time for you to short. Okay, now when there is a break of structure, price rejection, trend line breakout or breakdown, pay attention. You need to learn something here. Now, the first, remember, all these things I mentioned can be used. Candlestick pattern can be used. It does not mean that all of them can be used at same time. What I mean here is candlestick pattern can be used, break of structure can be used, price rejection can be used, trend line breakout or breakdown can be used as what? Entry trigger. Let it get into your head. Okay? We want to now, this is a clear price rejection. Now, change of this is where we had a clear price rejection. Are you watching me? Where is that place that we had the price rejection? Who can answer that? Answer that. Put that, answer that to yourself. But you can see that we have been having the market has been falling, falling, falling. And unfortunately, around this level, the market started reversing. Now the price has rejected to go down, and what would we had again? We started having upside. Now, entry trigger here is when you find out that a price has rejected from the price of this coin has rejected. Instead of going down on downtrend, it started going up. This is an entry what? Trigger for what? For long. This is an entry, this is the area for entry for long. And if you enter here, you will scale through to this upside. Now, remember, many things determines this. What? First of all, you see that this area was also a support level, which means you can see a support level and it can serve as your what? Entry trigger. Now, you can also see that you can also notice a price rejection and you can also long from here. Now, the next part I want to show you guys is now this is also another side of price rejection. The price rejected from going down, and the next thing we saw is the price started coming up. Rejection has happened here. We start moving up. Now, a rejection also happens at the what? At the uptrend. If the market hits a support, if the market hits the resistance level, we can say that the price has hit the resistance level. Instead of it to break it, it rejected from up and what? It started going down. Now, you can also name this as a break up structure. Now, uh, Okay. Okay. I want to show you this. This is a perfect example. Um, a perfect example. A break of what? A break of structure. A break of work structure can serve as your entry and exit. Your entry, not exit. I'm talking about entry point. We have been having what? Downtrend. From here, from the upside here, you can notice that we had downtrend, downtrend, and next thing, a structure was broken and will change to uptrend. That is an entry trigger for you. Okay, that is an entry trigger for you. You enter from here and you know that the market has broken up and we will keep going up. We started going up. A break of structure. If I can call this thing a ranged structure here, now and around this level, we start having a steam range structure. Next thing I saw was a break of structure happen. The market started pumping. It is show you that now this is time for you to enter the market. There are also another thing that can help you as an entry trigger. When you saw what? When you saw double button or double top, double button or double top can also serve as an entry trigger. Okay, now if you look at here, this market formed a double what? Bottom. What do we call double bottom? Double bottom is this area now. You can see these two candlesticks. This is first candlestick, this is second candlestick. It formed a double bottom. Double bottom is that they are all standing in the same bottom. Now, if it formed from the first one, when a double bottom formed, it shows you that if the market is moving down, up, is market is down when double bottom formed. Now, the next thing to take is the upside. It will take, it will start pumping from when the double bottom formed. You can see another example from here. Uh, you can see another example from here. A double bottom, a double top. This is one we call it double top. It has heated there again, or you can also use these areas as a double. This area, these two, from the first one, next one. So all these things can serve as your entry and entry trigger. Hope you understand. Okay, now for me to refresh your mind again, what can serve as your entry trigger when you have determined this market structure, the area of value, the next in is your entry trigger. And what can determine your entry trigger? Your candlestick patterns, the break of structure, price rejection, and next one we're going to talk about right now, double bottom or double top. Next one we're going to talk about right now is trend line breakout or breakdown. If you are learning something from this video, destroy the like button. Destroy the like button right now. Destroy the like button right now. If you are learning something from this video, destroy the like button right now. Destroy the like button, guys. Destroy the like button, okay? Okay. I want to find a perfect example for what I want to explain. I want to find a perfect example. Okay, a perfect example. So I want to find a perfect example. A perfect example of this thing I want to teach you right now. A perfect example. So if I find a perfect example, it will make you to understand. Very easy. Very easy. Okay, so trend line breakdown or break up. Okay, okay. Um, okay, okay. Yes, this is a perfect example I'm looking at. Watching at this chart, you can see that I put on a trend line here and one here. What determines that this is a trend line is because it's touching what? Two places. This might be wrong, but I think I can just use it to explain what I need to explain to you. Now, this is a trend line, and normally, if the price moved here and find find a support in the trend line, then move up again, a possibility for this line was drawn so that the price can find another way like this, okay. So I want you to understand, and find another way like this, okay, like this. Now I want you to understand, and find another way like this, okay. This was what is intended for this to do. But what do we had from here? We had a break of the trend line. Okay, a breakdown, not the breakout. We had a breakdown of the trend line. Then, as we had a breakdown of the trend line, this serves as what? Entry trigger for you to short the market. If you look at this again, you can see the market started dropping and it was a massive profit. It didn't attain this level anymore. That was an perfect entry example, a breakdown of the trend line. Draw a perfect trend line, use it to determine the entry and the entry of your trade. Let's move to the next point. Exit point if you are right. Exit point if you are right. How do you determine your take profit? Do this with the next available S and R. Determine your next. What I mean by S and R is support and resistance. For those that will not understand, support and resistance. Determine your take profit if you are long with support, with resistance. I mean, sorry. Determine your take profit if you are on long position. Determine your take profit with the next available resistance. Then if you are on short position, determine your take profit from the next available support level. Why do we do this? We do this because you already know that if you long, there is a possibility that when it gets to the if you long, there is a possibility that when it gets to the resistant level, sellers will come in and sell. Even anybody that bought a coin and the coin reached to the resistant level, the person is actually hoping to sell the coin. So when people started selling their coin from resistant level, you need to take profit from that level. Or when you are on short, remember that when the price of that asset gets down to a support level, there are people that are coming to that support level. They have already placed order there, waiting for the market to reach there. Now, if the market reaches there, they are going to long. And when people started buying, the price of that coin is going to go up. That's why you need to take profit on support level. I hope you understand. Do this with moving average or price structure POI. Um, so is mm, a moving average. Okay. You can do this. I have told you that moving average also serves as a support and resistance. Now, if you are on long here, if you are on short from this level now, you are still on short. You are still on short. Just this will be a swing trade, and I want you to. Many people we do miss opportunities without even making too much money. So trailing this with a moving average for you to determine your take profit will help you a lot. When do you take profit from this trade if you shorted this signal from here? Now let's go. You take profit from this signal when the moving average has come below the price. That is when it has started serving as a support. When it started serving as a support, that is the time for you to use it and take profit. Okay, you take a profit. That is if you are long, and if that is if you are short. Then if you are long, you take profit when the moving average go above the price, or when a golden cross happens or a dead cross happen. That also can help you to determine and what is daily cross, the cross between the long term moving average and the short term moving average, whether below or upside. So these tools can also help you to determine the time to go to take profit and lost. And there is also another thing that you can use. You can use trend fab extension. You can use fab extension to determine the time to take your profit. I'm talking about taking profit. You can use trend fab extension. If you don't know what trend fab extension is, you can see trend based fab extension. So this thing also, you want how to draw each. You draw. I think you draw like this first. Yes. Okay. You draw. No, no, no. I think you draw. You draw like this, and you. What am I drawing? Okay. Yes. 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 I think you draw like this, and you split to this place. Okay. Down. This will help you to determine your take profit and long upon it. I think I made a mistake, but maybe I'll revert to my drawing board. Let me see. So you can use trend based fib extension. Fib extension, you can call it fib extension to determine your take profit and long. Okay. Next, after you have known your take profit, next thing, if as a trader, you take profit and you also need to set your stop loss. Now, the next thing you need to do is exit point if you are wrong. How do you place your stop loss? When your reason for entering a trade becomes invalid, you need to exit. It's simple as that. But many people used to turn it to praying ground. Many people used to turn this level as praying ground. Let's say I want to give you as a simple example. So do not be that person. Though I believe in prayer, and the prayer, what God cannot do does not exist. I believe that so well. But it's also very good if we follow strategy and we follow the right steps. You understand? Okay. Now, are you looking at my chart? Look very well. So now let's say. Now let's say this is price going up and down and down. So now later on the price reacted to this level. Okay, we had another up. Okay, okay, we have another up. Later on the price reacted to this level again. Okay, now you as a trader, you came on and you draw this line. You draw this line and you see this is a support level. Okay, you place a long here. because you saw what that the price of this asset is on long, is on support, and after 3 minutes you place the trade, the price move here, and the next thing it move here. You are still waiting, and it come down like this. So as a trader, you will need, okay, I want people there to answer me something. You will need, is do you place here a stop loss here, or you place here, or you place here? Where do we place stop loss? Where do we place stop loss? You place your stop loss around this ones, this place. You place around here. Okay? Because there is a possibility that it might come here, and it before it gets here, it might it might reach this level and reverse to your direction again. Maybe this is just a pullback happening. So why we need to put a stop loss around this level is because the reason for us entering this trade, for you entering the trade for the first time, is because of what? Because there was a support level here, a support level here, a support level here. Now, for the first time that the price hits here and it pushed it up, it hits here and it pushed it up, it hits here and you say, oh, this is a support, the price need to push it up. But unfortunately, this didn't happen. Now, your reason for entering this trade has been in remain invalid, is now invalid. You don't need to stay in that trade. You don't need to turn it to a prayer ground. You need to exit the trade with your stop loss, so that instead of you to have this loss here, maybe you to start here. Instead of you to have this loss here, you exit here and save your capital. Went back to your drawing board and re-strategize. Come the next day and you make the profit back. It's very simple and very easy. Okay. So if we to look for an example, and if I want to look for an example, okay. Okay, let me use this in as an example. This let me use here as an example. Let me use an example. An example. Because you know that this place has served as what, a resistance first. It has been serving as a resistance from these areas. Then you came again as a trader. You say, oh, I want to short this thing because you have placed order here, because this area always serve as a resistance. Unfortunately for you, the price break out. Okay, the price break out as a trader. Now from here, you need to come along around this place, and place your what, stop loss, so that if a breakout happen and you are already on the trade for short, you can exit here without losing more, because the breakout has happened. That means your reason for entry the trade has is now invalid. Okay, you go out of the market. Okay, so do not turn it to a prayer ground. Always obey strategies. Always obey strategies. Okay. There are also many things you can use to determine your stop loss level. But the one me personally I do use is what I just showed you now. Support and resistance. That's one of the things I do use regularly. In fact, almost all the time, I use it to place my support and resistance levels. Okay, I know you have learned this one today. You look. Let's assume from this trade now. If I am to enter this trade, I will enter from this level. Okay, hope you are seeing. So I will enter from this level. now from this level. And if I am on long, I will place my stop loss below here, because I know, and this area is now a is okay. This area, I will now look at what happened when a break of this side happened, a dump below. I will use this place. I'm telling you this practically what I do. So I'll place my stop loss below here. What will I place my stop loss here? Because I know if this support level break down, there is a possibility of going more down. So I'll place my stop loss here. If a breakdown happens and it didn't started going now, maybe a week. So why you don't need to place at your entry is because a week can happen. You can see that this place was the support level, this place was the support level. Let's say this place was the support level, and this is a week. Okay, candle, the week of this candle, before it also obeyed the support level, but there was a week that happened. So if you are a person that do place your stop loss below, just little below your entry, this little week that happened, pullback that happened here, will took you out of the market, and you will lose money and you will not make money. I don't know whether you people are seeing this thing very clear. So I'm talking about here. So if you enter this trade from this level, oh my god. So if you enter this trade from this level, okay, now a week here, this is week. So this is the week. This is the week here. So this week here now, this week here now can take you out of the market. So you enter from here, you come down here, around here, and you placed it your stop loss, so that if this is no longer weak, that it means that the market is dumping, it will take you out here and you will not lose more money. But if this thing later serve as a support, even if you drop down here, you will still be in the trade and your trade will start going in profit. Okay, your trade would now go in profit. So it's very, very important, my people. It's very, very important. Now you have known the first approach, which is support. Okay. Oh my god. Now you have known the first approach, which is first you go on a support level. Uh, you go on a support level. So let's now follow from the beginning, which is first the downtrend. First of all, you find out that you have find out that this is a first from here. Now let's follow the three steps. You want to trade this, and you placed your you saw that this thing is making a higher low. So you have already known that this is a what, a downtrend. Now the next thing you need to find out first, you determine the area of value. Now this place can serve as your area of value, this area can serve as your area of value, as you already know that the market is in downtrend. Now you use this place as an area of value. Now the next thing is you find your entry point, and you know that this place was a support before but broken, sound now serves as a resistance. It was a support before, broken, now serves as a resistance. So you entered here and that was a short position, and you can use here as an entry again for long when what, a break of structure happen or a price rejection happens. A price rejection happens, you determine your entry. Then the next one is you find your stop loss and take profit. So you can do that with support and resistance, or you can do that with moving average. The next one is okay, your spot loss and take profit. I think that will be the last. This is the exit point. If you are wrong, that is your stop loss. And first, so let's start from the beginning. Let me name it again. Five things to look for before you place any trade. First, know the market structure using what? Uptrend, downtrend. Second thing, find the area of value. How do you find the area of value? Using support and resistance. Find where the buyers or the sellers are willing to sell the market. You can do that with support and resistance, or support and resistance, moving average or trend line. Now the next thing is find your what? Find your entry trigger. How do you place the trade? What will get you into the trade? Chart patterns, break up structure, price rejection, trend line breakout or breakdown, whether long or short. Next is exit point. If you are right, exit point, that is if you are right, means take profit. Take profit. Take profit. How do you take profit? Do this with the next S and R, support and resistance. Next one is do this with moving average or price structure or POI, point of interest. Now the next thing is exit point. If you are wrong, how do you do? How do you place your stop loss? Please, when the reason for entering a trade becomes invalid, you need to exit that trade. Okay, I hope I have shown you what to do as a trader. I did not do this to confuse you, but rather for you to learn something. And if you learned something today, place a trade and send me the screenshot. Send me your results. Always send me your results so I can repost so that many people will believe. If this thing has, if you try this and it changes your trading strategy, it changes your trading, if you if it changes you, like you started making money, if you started making profit, always remember this channel. Always invite your friends in this channel. Thank you for joining me in my masterclass today. My name remains Ernest Bukas, and you watched Bukas Masterclass. Do not forget to like and share to your friend. Join MaskEX Community is in the link in the description below. Follow me on Twitter. If you are on Twitter, follow me on Twitter and Facebook. I am always active, and I drop trades, I drop things, I drop market trends, and drop what is happening in the market. Follow me on Twitter. Invite your friends, tell your friends to follow me on Twitter also. You can share with your friends. Let everybody follow me. Follow me. If you follow me, I follow you as well. Follow me and I will follow you as well. Let's make trading our hobby. We have chosen this as what gives us money. Let's take it serious so that we can start, we will keep making money from it. It's been a long video and I thank you if you watch this level. Okay, have a nice day.